We are going to begin with stocks that are once again looking like a rough day for the market. Stock index futures have been trading sharply lower overnight. At one point, the Dow was down 261 in the pre-market. Now we're down 269, actually. Let's bring in to talk about these numbers Jonathan Hoenig, portfolio manager at Capitalist Pig Hedge Fund, a Fox News contributor, and the author of a new textbook of Americanism. A textbook of Americanism.com. Yeah, I think I read that wrong. But anyway, Americanism.com is the website. So let's talk about this, Jonathan. Congrats on the book. But I want to talk about these futures because it seems to me that the concern isn't about this quarter and the earnings we get for this quarter. It seems to me it's the fourth quarter. It's 2019. Once the tax cuts wear off, once the effects of the trade war on companies start to really kick in, that's what the street seems to be worried about right now.
Yes, that's it, Cheryl. Exactly right. I mean, the economy is strong right now. It is booming. Unemployment is quite low. As you said, the economy is doing quite well, but the market is a forward-looking indicator, and it is forecasting that something is not well, if not in later 2018 and certainly in early 2019. And, you know, Cheryl, it was a few weeks ago. This just didn't start just yesterday. A few weeks ago, we started talking about the weakness in the FANG stocks, those technology stocks. But now that has really spread. Yesterday, almost 500 new 52-week lows, only about 30 new 52-week highs. The most worrisome sign for me are the banks, Cheryl. These were among once the strongest of the U.S. stocks. The 52-week low list is now littered with banks. This is portending something very worrisome moving forward, if not 2018, 2019.
Yeah, because we expected double-digit profit growth, and we are expecting that for the third quarter. 36% of the market cap of the S&P 500 actually reports this week. I wanted to ask you about that because we're going to hear from Caterpillar. That's a big one. 3M, McDonald's, Verizon, United Technology, all of those companies are on tap today, and that could certainly, you know, change the story as we get these numbers this week. You know, forget the day-to-day, even the week that could be better. But Caterpillar is really the story when it comes to trade. What do you make of that?
Yeah, I mean, Caterpillar, tremendously important. And interestingly, a lot of these trade-oriented stocks have been the real laggards as of late, Cheryl. You know, Ford yesterday, this week, just mentioning that the trade tariffs are costing their bottom line. U.S. steel is now tremendously expensive. And about a third of the S&P have mentioned that tariffs are impacting their bottom line. They're keeping an eye on it. So it's one of the factors. Quickly, again, put it in some context. We are in the midst of the longest bull market in U.S. history. Bulls they eventually die or tire. This might be it for us.
Right. Real quick before I let you go, we are waiting to hear from Turkey's President Erdogan. He's supposed to give us some new details about the death of the journalist over there. Do you think that Saudi-U.S. relationship is in jeopardy? Are markets really worried about that right now?
It's another thing that's sapping liquidity out of the marketplace. You know, when you're looking for reasons to buy, bad news headlines for these, Cheryl, don't add a lot of reasons to put money into already a weak market.
Interesting. Okay. All right, Jonathan Hoenig, thank you very much for jumping on the story this morning for us. We appreciate it.
Sure.